Join me as I dive into the ultimate showdown between mutual funds and ETFs to see which one really comes out on top for investors in 2024. When it comes to investing, two of the most popular options are mutual funds and exchange-traded funds, or ETFs. These investment vehicles have gained immense popularity among investors due to their ability to provide diversification, professional management, and relatively low costs. However, it's essential to understand the differences between these two options to make informed investment decisions. Many investors find themselves torn between mutual funds and ETFs. The lines get blurred, and it's challenging to determine which one is the better fit for their investment goals. This confusion stems from a lack of clarity regarding the benefits and drawbacks of each. Some might think that mutual funds and ETFs are interchangeable terms, but the truth is, they have distinct features that set them apart. This confusion can lead to uncertainty, causing investors to hesitate or make the wrong choice. It's crucial to cut through the noise and gain a clear understanding of these investment options. By doing so, investors can make informed decisions that align with their financial objectives. One of the primary reasons investors struggle to choose between mutual funds and ETFs is the sheer amount of misinformation available. Let's break down the key features of mutual funds and ETFs to better understand their differences. Mutual funds have a distinct cost structure, which includes management fees, administrative costs, and other expenses. These fees can eat into your returns, and it's essential to factor them in when making investment decisions. ETFs, on the other hand, have a more transparent cost structure, with lower fees compared to mutual funds. When it comes to tax implications, mutual funds can be less tax efficient due to their trading activities, whereas ETFs are generally more tax-friendly. Trading flexibility is another critical aspect to consider. Mutual funds can only be traded at the end of the trading day, whereas ETFs can be traded throughout the day, offering more flexibility. Investment strategies also vary between the two. Mutual funds often have a more active approach, whereas ETFs tend to track a specific index or sector. The key takeaway is that mutual funds and ETFs cater to different investment goals and strategies. Mutual funds are suitable for investors who want active management and are willing to pay slightly higher fees for potentially higher returns. ETFs, on the other hand, are ideal for investors who prefer a passive approach, want more control over their investments, and are looking for lower fees. It's essential to understand your investment objectives and risk tolerance before choosing between mutual funds and ETFs. By doing so, you can make a more informed decision that will help you achieve your financial goals. In conclusion, the decision between mutual funds and ETFs ultimately comes down to your individual investment goals and preferences. It's crucial to align your investment choices with your personal financial objectives to ensure long-term success. By understanding the key features and differences between mutual funds and ETFs, you'll be better equipped to make informed investment decisions. What's your experience with mutual funds and ETFs? Do you have a preference for one over the other? Share your thoughts in the comments below. And if you want to learn more about investing in 2024, be sure to check out our next video on the top investment trends to watch this year.